Hi folks, Danny Bird here, doing a midweek update because we had the CPI number today. So I want to very quickly go through what the market did. It's not so much what the market was supposed to do, it's what it actually did. So the reaction to the number, which actually was positive today. So you can see here the there we go. So the forecast was 3.1. We talked about this on Sunday. I thought that we would come in at 3.0, and I explained the reasons why, as well as in my newsletter. And that's what we came in at. Mr. Zuber was shooting for 2.9, which was pretty aggressive, but not out of the range of possibilities. But we came in at 3.1, 3.0, and the market seemed to like it. So the market took off. We'll look at that in a minute. I still have some concerns about where we're at right now, but we'll talk about that in a minute. Core also came down. So core CPI month over month came down to 0.2. So that's really important. It actually came down 4.8 on the year over year number from 5.3 of what it was last month. So a significant decline in core. Now, interestingly, everyone's still talking about a Fed rate hike on the 26th. And because there's so much talk about it, and because the Fed is kind of suggested that's what they're going to do, then I think there's a high probability that will happen. But I would not be surprised if they don't raise at all in July. And then they raise again in September, and I'll show you why here in a minute. Now, tomorrow morning is the PPI number. So last month it dropped significantly. It actually had a negative. This month it's forecast to go up a little bit, but I think it's going to probably come in at 0 or even go down a little bit more. So let me show you why I think that on these things. First, on CPI, as I said on Sunday, CPI is calculated based on a 12-month window. So you can see the new one that was just reported this morning is already in here. And this was the 12-month window, the rolling window. So this big increase back here is the one that dropped off. So the one for May is what dropped off. Now the next one, which will be reported in August, actually, it was this one dropped off last month. This is the one that was going to drop off this month. So last month there was a big one, so it went down 0.9%. This month was an even bigger one. That's why I thought we'd come in better than the 0.9% that was forecast. We actually came in 1% less, and that's the reason. So if we move this now, and our rolling window now moves over here. So this is where we are right now. And what you will see is next month in August, it's not a big increase that's dropping off. It's a slight decrease that's dropping off. And the effect that will have is that it will make inflation look like it's starting to come back again. So here's the CPI for today, 3.0, down from 4.0. I wouldn't be surprised to see this go back up, maybe to 3.2. or 3.3, somewhere in that neighborhood, but a slight tick back up because of this right here. And what you'll also notice is the rest of these are not very big increases. There's one fairly big one here, and there's a fairly big one here, but most of them are pretty small increases. So the hard work comes now. So all the easy work has been done. We got down to 3%. We'll probably tick back up a little bit next month, and then start very slowly going back down. So it's not going to be a huge drop anymore. It's going to be a small drop each month. So we'll see what the Fed does with that. Here's core down here. So core dropped from 5.3 to 4.8. So that was a significant drop in core, which is great. And real estate housing actually makes up some of core. So that's going to come into effect in August, as Michael has been talking about. So that might have an effect here in the next, actually the August report. Now for PPI, here's what PPI looked like. You can see the big drop last month. This is going to be reported tomorrow. They're forecasting an increase, which would send this line up slightly. I think it's going to be a slight decrease or even flat. So this is going to, again, look like it's starting to head down. If it does have an increase, it's going to look like this over here, this increase here, and then it will start going down again. So we'll see what happens with PPI tomorrow morning. That's at 8:30. And you can see the 12-month rate of change on PPI. It's pretty consistently been heading down. The 3-month gives you a better view of the short term. So it started to head up in through this period from September to March. And then since March, the 3-month rate of change has actually been dropping. So again, if we get an increase tomorrow, that doesn't necessarily mean that this will increase as well, because it's a 3-month period. It might just go flat. So we'll see. We'll see what happens, and I'll cover this one on Sunday after the PPI comes in. So let's take a look at where we are for the month. So right now you can see you are here. This is Wednesday. There's the CPI inflation report. We've got 2 more days left this week. I think we probably may have a fairly good or possibly a flat week. According to Stock Traders Almanac, you can see here the next day is a down day typically, and then the rest of the week starts to trend back up again till we get into the middle of July. Now, options expiration is on the 21st. So the middle, this peak right here, back for the last 33 years or so, that peak is just a couple of days into next week, Tuesday, basically. So Monday and Tuesday, we might still have a little bit of life left. And then the rest of the month, and actually all the way into October through the summertime. You can actually see it here on this one. So here's what it looks like right now. We are roughly right in that area. You can see the peak here in July. NASDAQ's best 8 months will end next Tuesday. So again, according to going back to 1971, this is for the NASDAQ. Since the NASDAQ was created, it peaks out next week and just before options expiration. I'll talk about that on Sunday, but options expiration many times we'll do the opposite of what the market has been doing. The market has been going up, so expect to see the market start to fall off even on expiration day or the week after, which is the rest of July right here. So that's where we are, and that's what things look like. Let's take a look at the charts and what the charts look like. First, we'll take a look at the S&P. So the S&P, you can see right here, had a little bit of a gain today, actually gapped up, actually broke out of this overhead resistance. And what you see here is a bearish divergence, or potentially a bearish divergence. So that means the momentum indicator, the RSI in this case, and the PPO down here, which is similar to the MACD, those are trending downward at the same time that the price is trending upwards. And interestingly, you can see that today we went above it during the day, but we came back to just below it by the end of the day, by the close. This is what concerns me a little bit, at least in the short term for the market. First of all, that we gave back half of what we gained today. Secondly, this bearish divergence. Divergences like this are oftentimes pretty reliable. So we'll see what happens, but I would not be surprised to see us come back down here to the 21-day moving average, somewhere in the 44.72 range. Right now, 4,500 is the key. That's the key level that we have to get above. Once we get about 4,500 in that area, then we might really take off till the end of the year. But I think we're probably going to struggle through the summertime, especially after next week and going into options expiration. So be careful of that. We might have a couple more good days, and then we'll see what happens. Let's take a look at the NASDAQ. NASDAQ also broke out of that resistance level right there. The resistance actually is, I like to, different people can do these differently, but I like to draw them from the close. So there's the close right there. So that was resistance. We broke through it today, but we ended with a doji, which is indecision. Think of that as the trading that happened during the day. So bulls pushed it up, bears pushed it down, and it ended exactly in the middle. So neither one of those, neither one won. I'm going to talk about these on Sunday during our event, which I'll talk about in a minute. So again, I'm a little concerned about that. That could be a reversal. I don't think it's going to be significant. I think that we've also got a bit of a bearish divergence here as well. I don't think we're in risk of breaking through this support line down here, but we could come right back to it. So we'll see. We'll see what happens. The Dow now has been a little bit more volatile. So it doesn't have a clear upward channel. And in fact, it ended with a shooting star, which is a bearish reversal. So the Dow also is telling us that this might be a temporary rally, and be careful because it might start to trend down. Finally, we'll look at Bitcoin. Bitcoin is just kind of stuck, hanging right in here. It's at 30,343, and for pretty much the better part of a month, it has just been hanging right in on that resistance line right there. So the good news is this is a potentially a bullish flag pattern. So it may, the bottom down here is roughly 25,000. This is at roughly 30,000. Let's call it 30,000. So that's 5,000 points. So the target on this is equal distance to that move right there. So another 5,000 up, or 35,000. We'll see what happens, but Bitcoin is just like hanging out, not doing much of anything. Okay, so let's take a look then at yeah, we looked at that. I want to look at some stocks that I've been watching. We'll just look at a couple of stocks, which I've put into this chart list here in stock charts. It allows you to create chart lists, and I like to put a number of the ones that I like to watch. A lot of them are technology stocks. This allows you to do lots of different things. So I can do percent change. So I can see Daktronics is the one that had the biggest gain today, 19, almost 20% just today. But it shows you what the rest of them are. You can also, and then you can go down this to see what the big gainers were, to see what sectors they were in. Discretionary, technology, real estate. It's pretty diverse. Communications, quite a few technology. There's financial. So it's actually pretty diverse so far. But you can also sort these by symbol. And I'm going to take a look at NVIDIA first. So NVIDIA is down here, right in here. So NVIDIA had a nice rally today. And look at that, ended right at its resistance line, right at it. And the momentum indicators are trending up. So that's a good sign. Accumulation distribution has not broken the highs that it made back here after earnings, but it's starting to trend back up. It's outperforming the S&P significantly, and it's outperforming its peer group quite a bit. But this is really interesting right here, that it's right at resistance. So we'll see what happens tomorrow. Based on the indicators, it looks like it might break through. And if that happens, it could take off to new highs once again. But we'll have to watch that too. So resistance might cause it to bounce around and go sideways for a little while. What else? Microsoft. Microsoft has been trending downward, but it went down to its 50-day. It's hanging out right around its 21-day, which is a reversion to the mean. You can see how bullish this chart looks. Comes down to the 50 and bounces up. Comes close to the 50, bounces up, hits the 21, bounces. So I think Microsoft, again, if the market cooperates, now it has a shooting star candle right here, which is a bearish reversal. So there's a potential that this could start trending down. It's underperforming its peers. So that's something to watch as well. So we'll see how Microsoft does. There was another one in here. Oh, I know, DraftKings. DraftKings got an upgrade today. So let's take a look at what they look like. Look at that. Big gap up. It had been trending up for the last 4 days, bounced off of its 21-day moving average. It's well above the moving averages, which oftentimes means it will either go sideways and let the moving averages catch up, or it may come back down to touch them and go take off again. If that happens, I think DraftKings is a good entry point if it comes back to these moving averages or retraces, even back to the prior resistance, which let's put that in here. So prior resistance was right along here. 26. So, and that's right about where the 21-day moving average is. 21 days at 26.50 roughly. So it could potentially retrace back to there. If it does, that would be a good entry point. It also has a shooting star. So you're seeing that a lot in a number of charts today. Shooting stars means that it had a great rally this morning off the CPI number, and it gave a lot of it back in the afternoon. So it closed higher than it opened, but it gave back a lot of the move during the day. I never like to see shooting stars. In fact, many times that will be a signal for me to just get out, because oftentimes it continues down, not all the time. So because DraftKings got an upgrade today, and that's what caused us to go up, that might just continue as a result. Okay, anything else? Any other interesting ones on here? Let's take a look at Daktronics, just because it had such a huge move today. Look at that. Now there's a huge shooting star. So this is a great example. I'm not sure what caused that. I don't know if there was news or earnings or what. I'd have to go look at the news on this one. But this was trading right along its 50-day moving average, and then broke out today, traded way up here, 8.860 roughly. So it opened at around 7, went up to 860 and pulled all the way back and closed at 733. So that's this is the kind of candle, whenever you have a stock that shoots up so much like this, depending on what the reason is. But something that shoots up so high like that, I often like to put a trailing stop when it gets, up near the top. Put a trailing stop on it, maybe 5% below the close. So if it does come back down like this, you at least can capture a lot of that gain. Okay, so that's it for those. Let's close this out. I want to remind everybody that this Sunday, July 16th, we are doing an event. I'm hoping that the folks that put this video together for YouTube will put the link for this. We've got quite a few people signed up. There's still some seats left, so if you want to join, please do. I want to be perfectly clear that this event is not a marketing event. That is not the purpose of it. I will introduce my new website, but there's a reason for that. But I will not spend much time on it. I'm going to spend some time on Technical Analysis 101. These are all the topics, but I'm going to go through these topics pretty quickly. So for those of you that would like to understand charts better, this is a great opportunity to understand how they work. For those of you that are experts at technical analysis, this will just be a review for you. You might pick some things up. We always do. And then we'll take a look at risk management, which is one of the most important things in successful trading. One of the most important things of maintaining your portfolio and making sure that you don't get knocked out of the market completely. Because if you have no money to trade, then you can't be a trader. Risk management is the #1 objective in my trading and should be for everybody. And then I'll touch very briefly on some of the platforms that I use. So I'll show VectorVest, StockCharts.com, Earnings Beats. I'll show some of those platforms and how I use them and give you some tips and tricks in case you might be either using them now or thinking about using them. This section won't take very long either, other than the risk management. I'll spend some time on that. And then the last part, which I expect this to be an hour or more, is just an open forum for folks to ask questions. Give me a symbol. I'll bring up the chart, just like I was doing a few minutes ago. I'll put in the resistance lines where I see them, and give you my opinion on what that chart looks like. So this is, and you can ask any other question that you want as well, including any questions for those of you that have signed up for my website. The reason that I'm doing this is because I've been having huge problems the last couple of weeks in getting the emails out. And I was actually alerted by a listener from this channel that part of that problem could be in danger of being flagged as a spammer from my email platform, which would not be good because they could just shut me down completely. So in trying to figure out a way to still get the newsletter to folks for free, this was the best option that I came up with. This does require that you register your email, but it will not ask for a credit card. So the purpose of this is really to get the newsletter out to folks at no charge and let you look through it, browse through it. It's really meant for people that are just interested in the market, but the website itself is for anyone that is serious about trading. This is what the website looks like. For those that are really serious about trading or are doing trading already today, there is a ton of value in here, which I'll touch on Sunday. There is a subscription price to get to those components, but not for the newsletter. So the newsletter will be right here, and it's downloadable in a PDF format. That will be no charge. You just have to register your email. You also can see all my book recommendations, the one that I put in my newsletter before, and you can click on these and order these books directly off of here. This actually, you don't even need an email registration for this. You can go to the books anytime and just, click on one of them if you see something that's interesting, and it will take you straight to Amazon, and then you can download it from there. So that's the website. That's what we're going to do very briefly before the open forum question and answer. I'm just going to touch on that and explain why I had to set that up and when we can expect the actual emails probably to stop being sent before I get flagged and shut off. But anyway, this whole session here is not a marketing session. It is really just to help you understand why I'm creating this website, to try to get the free newsletters to everybody. But this is mostly education to help people understand what technical analysis is, how to use it, and how beneficial it can be. So that's it. You can either log into the website and get the newsletter, or you can send me, just like always, you can send me an email to breakpointtrading@gmail.com, and I'll add you to the list and get it out that way. So that's it. Thanks everyone for joining. I appreciate it. I am going to sign off for now. Have a great week. We'll see how the rest of the week goes. Remember, options expiration is next week. That's always a volatile week, so be careful. And I look forward to talking to you on Sunday.